Hey, what's going on, guys? Welcome back to another video. We have family offices may now see Bitcoin as an alternative to gold. Watch decentralized insurance as another emerging DeFi trend. PayPal integration looms, and Paxos CEO sees mass adoption for tokenized assets. Ripple is setting up a regional office in Dubai, and Silicon Valley and smart money are behind this Bitcoin rally, the data suggests. These are a few of the things that we're going to be going over today. So if you're trying to stay up to date on what's happening with Bitcoin, altcoins, and everything going on in the crypto space, make sure you subscribe and hit the bell. You'll be notified every single day when I upload. And if you guys are frequent viewers and you want to show some support for the show, then a like helps a ton. With that said, let's jump into this. So the Google Trends interest is relatively low for the keyword Bitcoin, while on-chain data shows smart money is accumulating Bitcoin. And that is one thing that we've seen, guys. We have seen that the chart on Google Trends, when you type in Bitcoin, there really isn't that much more search volume. So high net worth investors are buying Bitcoin. According to on-chain analyst Willy Woo, it has been mostly high net worth investors who have been purchasing Bitcoin. When whales buy Bitcoin, they mostly facilitate the deals through the over-the-counter market. Over time, spot and derivatives markets trail the OTC markets as whales lead the upsurge. Wu said, "Who has been buying this rally? It's smart money, high net worth individuals. You can see the average transaction value between investors taking a big jump upwards. OTC desks are seeing this too. Bitcoin is still in its stealth phase of its bull run. The trend of whales front-running retail investors is optimistic because it shows Bitcoin is still in its nascent bull phase. Large capital from new investors and mainstream investors is yet to enter the cryptocurrency market. And Glassnode metrics paint a similar trend. The number of Bitcoin addresses holding more than 100 BTC hit a 7-month high at 16,271. So over 16,000 addresses hold more than 100 BTC at the time of reading this article, at the time of recording this video. Whales consistently buying Bitcoin over the past few months is optimistic in itself, but Wu emphasized that the number of new whales has also increased. If the number of addresses containing large amounts of Bitcoin increases, analysts consider it as an overall spike in new whales. The rise in high net worth individuals accumulating Bitcoin coincides with the start of the recent institutional frenzy around Bitcoin. So think about that, guys. I mean, we have the price of Bitcoin right here sitting at 15,276, and this is basically all the smart money that is buying. This isn't even a retail rally, which is really insane because we're getting very, very close to the old top of around $20,000. And if we do make it up there with absolutely no retail FOMO driving this, that is insane. And honestly, you can see why there is no retail in crypto, because they're so distracted with the elections, right? Where has everybody's focus been since Bitcoin has started this rampage of a run? They've all been focused on other things, other events, mainly the election, right? And while this election has been going, Bitcoin has been going on a rampage, and it's going unnoticed by retail. But who is noticing it other than me and you is smart money. Smart money is noticing it, and what this article and what Willy Woo is pointing out is that this entire run has no retail FOMO in it. It is all that institutional investors, family offices, like we're going to talk about here. But let's move on to Ripple. If you guys are enjoying the video, make sure you drop it a like, greatly appreciated. And Ripple sets up a regional office in Dubai as a new global HQ plans loom large. Ripple is yet to decide where to base its new headquarters, but the firm today announced that it is set up a regional HQ in Dubai. Ripple will set up shop in the Dubai International Financial Center, a towering block that Ripple must share with over 100 cafes, 3 hotels, and several art galleries. Ripple will also cohabit the block with others in the DIFC Fintech Hive, a co-working space where fintech companies can bounce ideas off of each other. Gupta from Ripple says our regional office will serve as a springboard to introduce our blockchain-based solutions and deepen our ties with even more financial institutions in the region. So it looks like this is a massive, not only setting up an HQ, but a massive networking event as well, as he points out, with deepening their ties and a springboard to introduce their blockchain-based solutions. So very, very cool, guys. Dubai there's a lot of money in that country, right? right? And there's a lot of probably influential people, a lot of great connections to make. And I think Ripple having an HQ out there, well, it definitely cannot harm them. I think it only serves to benefit them. And I'm sure Ripple realizes that as well. Things are looking very nice for Ripple. As we know, they continue to make progress on an almost daily basis. There's always some type of news coming out about Ripple. We also have the PayPal stuff. So as the PayPal integration looms, Paxos CEO sees mass adoption for tokenized assets. Also, guys, don't forget that we saw the SEC chairman say that stocks may very well be tokenized. Remember, that was the SEC chairman saying stocks may very well be tokenized, saying he was open to the possibility, and if people have solutions, the SEC wants to see them. So in a panel last week for the London Bullion Market Association, Paxos founder and CEO Charles Cascarilla discussed the growth of Paxos Gold-backed ERC20. One of the things they told viewers was that an asset-backed gold token was a natural fit for the Paxos vision. They say it was really a very logical thing for us to launch a gold token given what we're trying to do at Paxos, which is to be infrastructure for the blockchain-based financial system, the more open financial system that we think is going to evolve from the one we're in now. To date, Paxos has tokenized 75 million in gold, or 37,000 ounces, just a fraction of the estimated 7.3 trillion global gold market. Cascarilla notes that widespread adoption is slowed by the prerequisite steps, has to first choose to adopt blockchain, then likewise choose gold as an asset to take on chain. He believes, however, that a 5 to 10 multiplier in assets under management, bringing the total tokenized gold market above 1 billion, is where the market for tokenized assets would really begin to, quote, cook with fire. Moreover, he thinks that it could happen soon. He says some of the partnerships we have in the pipeline will be able to bring digital gold to hundreds of millions, if not billions, of people within the next 18 months. I think that the adoption curve for both blockchain-based assets, but specifically gold, are very, very bright, and that is where the future is going to be. He did not mention PayPal as one of the partners. Commentators have speculated that the Paxos PayPal integration could be the gateway toward mass adoption for cryptocurrencies, and if a behemoth like PayPal were to offer access to tokenized assets, they could be next in line. And in spite of what gold bugs like Peter Schiff have been championing, for those of you who don't know, Peter Schiff is a gold bug and he just really hates Bitcoin. And Cascarilla believes gold in particular will have to be digitized in order to compete with Bitcoin. He says having a physical bearer asset only has so much utility in today's world. And what he's saying by that is that physical gold can only go so far, right? For online payments, the world that we live in, physical asset, it has barriers. There's only so much utility it has in a modern digital economy like we kind of have now, like we are absolutely moving into. So digitizing gold, he's saying, is basically the most practical way we could probably use gold as a form of payment in the current economy that we live in, if that makes sense. And I think that does make sense. And I think the tokenization of assets is definitely something that we are going to see. For those of you who are still having your cryptocurrency on exchanges, make sure you take it upon yourself. If you think your cryptocurrency is going to be worth quite a bit of money, an exchange might not be the safest place. There is a link to shop Ledger Nano wallets in the description below. They have some sales going on. You can get a Ledger Nano S and a Ledger Nano X for just $150. They also have different colors that you can pick from. I have the black because that's all they had, but they have tons of different colors. My favorite one is this transparent. Really wish I had a transparent, but make sure you guys are storing your crypto safely. Again, there's a link to this down below. It helps support the channel. Of course, you can also use paper wallets. You can use hot wallets. You can use other forms of cold storage, but personally I use Ledger and it works great for me. I don't really have any complaints. We also have decentralized insurance as another emerging DeFi trend. DeFi insurance sector might expand into conventional insurance products over the coming months. The emergence of Oracle networks as well as the general adoption of crypto assets will help this sector to grow. So you guys have all heard of DeFi, but have you heard of DeFi insurance? So DeFi is about more than just lending and borrowing. borrowing. While platforms like Maker and Compound account for the lion's share of the TVL into the entire DeFi ecosystem, decentralized insurance networks are also increasing their presence. The biggest platform in this subsector, referencing decentralized insurance, they say is Nexus Mutual. It currently offers pooled insurance cover for smart contract and wallet failures, but it's planning to move into more everyday insurance in the future. This trajectory applies to much of the DeFi insurance sector, which might expand into conventional insurance products over the coming months, albeit with the distinction of providing cover in a decentralized, crowdsourced way. In its Q3 2020 market report, CoinGecko noted that decentralized insurance products have grown in step with the growth of the overall DeFi market. The reason why such platforms as Nexus Mutual have witnessed strong growth is that they provide crypto asset holders with a source of regular income. By inviting holders to pool their Ethereum or other crypto assets, they provide these holders with a share of insurance premium payments. Much the same goes for most of the other leasing insurance platforms in the DeFi space. With Ethereum, its platform works much like traditional insurance except for two main distinctions. People buy cover for a certain risk, they pay a premium and get a payout in case of a loss. Risks are covered by risk pools where insured people and or investors can put assets at stake and receive parts of the premiums as reward, he said. Explaining that compensation is paid from the risk pools and shared among the participants, Mussenbrock added that the whole process is automated via smart contracts. Ethereum has built a smart contract system where the whole process is automated on blockchain. Loss events are detected by so-called oracles, which trigger the payouts for compensation in a transparent and fraud-proof way, he said. Ethereum has been working on decentralized insurance for the last 4 years. We have a large supporting community which has been strongly growing since the rise of the DeFi movement. We expect further growth as soon as we are live with our first products on public blockchains, which we can expect for Q4 of 2020, said Mussenbrock. Very, very cool, guys. This article goes into it more about decentralized insurance. If you guys want to go into it more, it's from Crypto News. Watch decentralized insurance as another emerging DeFi trend. Just wanted to bring this up to you guys because I hadn't heard much about decentralized insurance. We know how much DeFi is taking it off, so now we all have it on our radar. So watch out for decentralized insurance. I'm personally going to be doing some more research on it, see what it's all about, and I recommend you guys do as well. It's very important to do your own research in the space. While I make a video for you guys, and I know you guys watch a lot of other content creators, also make sure that you're doing your own research and forming your own opinions based on your own thought processes. Because at the end of the day, the most trustworthy person you're going to find is yourself. And if you're trusting yourself and you're doing your own research, then at the end of the day, whether you do right or wrong, make good decisions or bad decisions, you will have nobody to blame but yourself, which is a good feeling, taking full responsibility. If you guys are enjoying the video, then make sure you subscribe and hit the bell. You get a video like this daily where I cover Bitcoin, altcoins, and everything going on in the crypto space to try to keep us all up to date and just document the news as we go through this amazing journey. If you guys could also help me out by pushing that like button, it helps tremendously with YouTube picking it up in their algorithm and showing it to more people. So thank you guys for all that, comments and everything like that. Your support has been amazing. Our prices for today, we have Bitcoin at 15,300, Ethereum at 446, XRP is at 25 cents, Chainlink $12, Cardano 10 cents. We have Monero at 118, Stellar at just under 8 cents, Tezos at $2, and VeChain is at a penny. IOTA is at 25 cents. Our fear and greed index for today is pushed back up into the 90s. We are now in extreme greed at 90, so just keep that on your radar, just something to take note of. We are now in extreme greed on the fear and greed index. We have been in extreme greed for the past let's say 3 or 4 days. We will know once this week turns to extreme greed, then it'll be a full week. But as of right now, about 3 or 4 days in extreme greed, nothing crazy. We're here. We know eventually we will start to slip back, but we could stay in extreme greed for a while, but just keep it on your radar again, guys. Also, family offices may now see Bitcoin as alternative to gold. The Grayscale Bitcoin Trust is outperforming gold exchange traded funds, a trend perhaps driven by institutional investors like family offices. This contract lends support to the idea that some investors that previously invested in gold ETFs, such as family offices, may be looking at Bitcoin as an alternative to gold, analysts wrote in the November 6th report. Now, this was sent to me by Rig Kevin. Make sure you guys go check him out, give him a follow, because he sends me some really great stuff, and this is what he sent me. JPmorgan says institutions ditching gold ETFs for Bitcoin. So basically exactly what this is saying, but this article is a lot better, goes a lot more in depth, and I want to thank Kevin for sending it over. So JPMorgan Chase, the largest US bank by total assets, notes that Bitcoin is eating away at demand for gold ETFs. Institutional investors such as family offices now view the world's largest cryptocurrency as a digital alternative to the yellow metal that used to be a go-to safe haven. In October, the flow trajectory of the Grayscale Bitcoin Trust became significantly steeper, while gold ETFs remained basically flat. So here is a chart that is showing this black line right here is gold, and this blue line right here is Bitcoin. And as we can see, that space between the gold and Bitcoin is widening. It's getting bigger. Bitcoin is making much bigger moves than gold. And we're actually seeing that right now in real time, because as Bitcoin has been going up, gold has been doing pretty much nothing. I know a lot of people who are in gold and they're kind of freaking out a little bit, but Bitcoin is definitely outperforming gold right now. So this contrast lends support to the idea that some investors that previously invested in gold ETFs, such as family offices, may be looking at Bitcoin as an alternative to gold. In September, Bloomberg reported about Grayscale outperforming 97% of all US ETFs. So think about that, guys. Grayscale is outperforming 97% of them. That is insane. I remember seeing somewhere the CEO of Grayscale was saying that when they first started up their fund, people were laughing at them. They were laughing at the thought of a Bitcoin ETF. And now it's just crazy that their fund is outperforming 97% of all US ETFs. It's like a crazy success story. Anyways, guys, that is the video for today. If you enjoyed it, make sure you drop it a like and make sure you subscribe and hit the bell so you'll be notified every single time that I upload. I did realize through going through my analytics, many of you guys watch the videos daily, but you are not subscribed. I'm trying to get to 10,000, so hit the subscribe button, hit the bell, because as you guys know, YouTube eventually does seem to shadow ban or block us crypto YouTubers. So by subscribing and hitting the bell, you're going to be more apt to seeing my content when it comes out, rather than you having to go and search for it every time. Again, make sure you guys are picking yourselves up a ledger. With the Bitcoin volatility going up, exchanges go down. Crypto exchanges go down. I'm sure the vast majority of you have experienced this with Coinbase, and also in bull runs, crypto exchanges get hacked. I was a victim of a hack in 2017, 2018. I had a lot of crypto coins on Cryptopia. I thought they were safe, and I learned the hard way just how not safe keeping your coins on an exchange is. So do yourself a favor. There's a link below. Get yourself a ledger, or get yourself anything, any other cold storage, paper wallets, whatever. I recommend Ledger, but honestly, anything that's not on an exchange is going to be much, much better off for you. With that said, I will see you all on the next one. Have a great day, everybody.